Dear members, very good afternoon to all of you. We welcome you in this another webinar on Grow Your Practice. And this is the seventh webinar which we will be having today. The topic is of interest to most of our members as it is related to professional opportunities and that too in the gift city. So we are fortunate to have the leadership with us, the chairman, CA Dr. Rohit Ruwatia ji, our Vice Chairman, Umesh Sharma ji, and our learned speaker of the day, C. Amit Kumar Kedia ji. Sir, thank you so much for giving us this time and the opportunity for the profession at large. Now, may I request the Chairman, C. Rohit Ruwatia ji, to please address the audience and guide us about the initiatives which the committee has recently taken and also about this upcoming professional opportunities which are there in almost every area for the chartered accountant. Over to you, sir.
Thank you, Alokji, the Secretary of the Committee for Members in Practice. Very respected and Honorable Vice Chairman of the Committee, Umesh Sharma ji. The Honorable Speaker of today's session, Amit Kumar Kedia ji, and of course, he is my close friend from Jaipur. And probably I started my journey in the institute with him. And we can see him growing so far in different areas. And of course, when I see him doing different areas, so I asked him that why not you come on our platform and let us discuss about some important initiative that the government of India has taken in the gift city in the IFSCA, in form of IFSCA. So thank you, Kedia ji, for coming on our platform on Committee for Members in Practice. And it is a capacity building session in terms of various professional opportunities and the recent development in the IFSC, International Financial Service Authority, which is set up in Gandhinagar, Gujarat. So it is, of course, when I go through this gift city, sir, I find a lot of inputs and initiatives which our professional brothers and sisters can take in terms of growing ahead. Because when we see the global institutions coming in the gift city, it is a global opportunity for the professionals in India to come there. Even the institute and the president of the immediate past president of the institute is heading the one of the committee on the financial service in the gift city. So a lot of discussion and deliberation is there that how the professionals can come over there and what kind of initiatives and what kind of challenges we'll face. And recently there was a draft from the IFSC on the financial services, which the institute has also commented upon. And we can see the opportunities coming out there. So we hope by this session today that the members who are attending, who really want to grow and understand where the profession is going ahead, in that sense, we are coming forward. So now coming to the Committee for Members in Practice, I, along with my Vice Chairman and the team of the CMP, are meeting every week or probably meeting twice a week. Even after this session also at 3 p.m. there is another meeting on a particular software related to the audit. And we are just trying to pull the capacity of our professional brothers. Because there need to be the initiative and executions at the same time. I'm happy to share that we have launched the practice management software and we are continuously working on the improvement of that software by the suggestions from the various stakeholders so that the usability of that practice management software becomes very relevant for us. And I'm sure Alokji is there to take care of that tool. Along with it, various initiatives which we are regularly hosting on the social media account of the Committee for Members in Practice, where on an average daily we are putting the initiatives which the committee is taking, which the programs the committee is doing. So my request to everybody to kindly follow the page of CMP committee to be aware of the initiatives taken by the committee. Now we are coming with the Practice Ki Pathshala in Center of Excellences of the Institute in Jaipur in Hyderabad. It is for the very first time this kind of program is happening, that at 3 days, 3 nights, you have to stay. A networking initiative by the institute, by the Committee for Members in Practice, where there will be no academic session. Only growth, technology, audit tools, office management, softwares, and various allied professional opportunities apart from income tax and GST is going to discuss, and we aim that by that session we'll be able to make good network. People across the country are attending, and a small size of 40 members will be participating. I think more than 35 registration in both the centers have already been done without much awareness, because right now institute has not circulated, but yes, on the social media platform we have circulated, and we have certain challenges, but we aim to do these kind of activities every month. So these are certain new initiatives. We are working on the audit fees structure also. Then we are working on another concept, Practice Ki Udaan, where the newly qualified chartered accountant who have taken the COP will be giving a career guidance in the profession, that how they have to step forward and work in order to give a direction to their professional practice. So I'll not take much of the time, but request to all my professional brothers and sisters that if you face any kind of inputs or suggestion for the committee for members in practice, feel free to connect to my WhatsApp, to my email, to the email of the office. We are always available to take the inputs. And even if any of the suggestion which need to be taken up in the upcoming meetings of the committee, we will ensure that those agendas are there in the committee, and will deliberate the voice of the common member in the profession, and certainly will bring out the output for the professional fraternity. So with this, we continue our 7th session. The day I became the chairman of this committee, it is the 7th Friday, and we are on the 7th session that we are not missing. And I assure that in the next almost 45 weeks, 45 Fridays which are going to happen, we'll have 45 more capacity building sessions for our professionals. Then I am happy to share more than 1,000 members attend the session. Every session is attended by more than 1,000 members. So thank you for the encouragement, for the support, for the working which we all are doing, and best wishes to everyone. Thank you very much. Over to you, Alok.
Thank you so much, sir, for apprising us about all the initiatives which this EMP has taken up. And now may I request the Vice Chairman, sir, Umesh Sharma ji, to please guide us about this session for today. Over to you, sir.
Thank you, Alok ji. Thank you, Rohit bhai, our chairman, and thanks to Speaker Amit Kedia ji for today's session. Friends, this is a very important session because it is related to the gift, and everybody likes gift. There is no person in the world that he doesn't like the gift. But this gift is very different gift. It is a gift from the government of India to the particular place where you can practice and get your practice to the next level. So this is the 7th session of Grow Your Practice. And what is this gift city? What are the advantages? How you can set up the office? What type of services you can provide? Recently, Institute has also tied up with the gift city authorities and government of India. We represented it there. Ranjit Kumar Agrawal sir, our president, and past president Aniket Talati sir, both have met the head of the gift city and IFSC and given the representation. So chartered accountants have a very big role to play. It's a new area, it's a niche area. It will definitely take your practice or consultancy services to the international level. So India is growing, like you know all that coming 25 years is Amrut Kal, what we say, and our president say it's a golden period, 25 years of our practice coming up. And yes, this CMP committee, as our torchbearer Rohit ji has already conveyed you that we are there. We will be coming with you with the novel ideas. And participant, please give your suggestions, whatever you feel for the growing of practice, that take this type of session, that type of session, or whatever networking summits we have planned, practice ki pathshala, practice ki udan. Lot of initiatives are there. Your suggestions are always welcome. Please feel free to contact us, and we are there. And I every time in the session gives a reference, otherwise that it's a Rohit and it's a Sharma, so it's a Rohit Sharma committee. So let's play in this committee and score centuries in this committee. So thanks Alok ji, and thanks to all participants for joining today in spite of the first phase of voting all over India. So over to you, Alok ji.
Thank you so much, sir, for setting up the tone of the today's session, which is in fact a very important one, because all the practicing members are definitely looking forward to the new areas where all professional opportunities lie. And that's why we would like to welcome Amit Kumar Kedia ji from the bottom of our heart for agreeing to deliver his expertise to help out the members, to guide the members as to what all professional opportunities which are existing, especially in the gift city. So Amit Kumar Kedia ji is having a rich experience in finance and consultancy, and he's having a distinguished career spanning over 16 years as a chartered accountant. His expertise spans over RERA, litigation, arbitration, SEBI matters, social stock exchange, to name a few. As a seasoned speaker, he shares his knowledge on various platforms, emphasizing his commitment to industry enlightenment. His forte lies in fundraising across diverse financial products, reflecting his unwavering dedication to fostering financial growth for entrepreneurs and corporations. Thank you so much, sir, for giving us this time. And now, without wasting any more second, we would like to request you to please enlighten us as to what all professional areas which are open for our membership at large. Over to you, sir.
Thank you. Thank you very much, Alokji, Secretary to the committee, our Vice Chairman, Umesh Sharma ji, and Chairman Rohit Ruhatia ji. I'm very fortunate that today the committee for members in practice have given this opportunity to me to address in front of all our members this opportunity. And the opportunity today becomes more important when we all are expecting that the next government would going to repeat its third term. And this gift city being a dream baby of our Honorable Prime Minister, Shri Narendra Modi, and today being the first day of polling, it could not be, the stars could not align so well at this particular point of day when we are knowing and understanding this opportunity of gift city. Friends, we might be knowing, or we would be knowing in this session, that in every country which is a developed, there is a developed financial system which is running through a global in a global financial arena. Every developed country have a international finance service center in their country, and our country had came up with this opportunity way back 2015, but now the development of this opportunity have started increasing many folds. Many folds, why I'm saying, you can just understand that at the time of COVID, the opportunity of investments, the opportunity of practice in GIFT IFSCA way back 2020 was, if we assume it X, then it have multiplied to 4X in just 4 years. And when we are now seeing a stable government in next 5 years, this opportunity would going to increase multi-folds. And we, as professionals, one of the builders of the nation building, are going to benefit neither by ourselves only, but by the globalization, by helping the industry in totality. So friends, today I have been allotted almost an hour and a half. So we would be discussing about this opportunity in Gift City. And after that, we would be taking our question answer session. I will request to post your questions in the chat box, and after the session, we would going to take all the questions, and I would going to make sure that none of your questions are are being addressed, and it is not left unanswered. So friends, if we see how we would going to cover this whole session, there are a background of the gift city. So we would be understanding about this background, what the infrastructure the gift city is having, how it is different from the world's gifts, the world international financial service centers. What are the opportunities which lies in the banking, the financial service, insurance, in the fund management entity, in fintechs, in global in-house center, aircraft leasing, shipping leasing, direct listing, ancillary services, bookkeeping, etc., etc. So friends, we as professionals who are having our client base not even in India but abroad, the client base which is in India may be seeing an opportunities for their expansion abroad, or clients which are already established abroad might be seeing the way back towards their own country. So the opportunity is inbound and outbound both. It is not related that it's just an export service or it's just an import. So in our future presentation, we would be understanding all this in detail. So we are talking about this gift city. Where is this gift city? This gift city, what is bring out? This gift city is there at Gujarat, as you might all be aware of. It is almost 20 kilometers from the international airport of Ahmedabad, which gives a service through an act of IFSCA, which is having the head office at Gift City, about the financial products, the financial services, and the financial institutions which they are having. So these products are being dealt by a separate act of IFSCA. In respect of the infrastructure, if we see, the infrastructure is there in regards to the area which is covered, which is almost 866 acres of land. But this land was further expanded to 3,300 acres just in December 2023. So you can foresee, you can think about the vision of the government which it is having, that in time to come, how big the thoughts of the government is, how big they are thinking to expand this city. In regards of the area, if we discuss and tell, then in terms of the commercial space, it is around 67%. In residential, it's almost 22%. And for the social space, it is 11%. So a very systematic distribution of the city has been done, wherein all the facilities in regards to commercial, residential, and social space has been proposed. What the country is thinking about is not even only the residential apartment, it is having international schools, it is having international branches, campus of education institutions, hospitals, medical facilities, like the Leelavati is building their hospital as of now, the construction is undergoing. Big, huge international exhibition centers, indoor, outdoor sports facilities, 5-star hotels, multi-cuisine restaurants, business clubs. There is a utility tunnel. There is, like, the power supply is from a centralized space. That is, whenever a disposable needs to be done, it would be done through the utility channel, and there would be no movement of any of the garbage through any of the means. Once it has been poured into the utility tunnel, it would be a suction would be there, and all the cleaning would going to happen. So this is what is the infrastructure this city is being developing. It is said and assumed that coming 20 years, 25 years down the line, it would be next Singapore, Dubai equivalent infrastructure which the gift city would be having. In terms of the institutions, if we see big institutes like Deccan universities have opened their university there. It's an Australian international university. There was recently applications which were called, and there were 6,000 applications which came for like the first session of their admission. Then IM institute like Kozhikode, Lucknow, BITS Pilani, they have done an agreement and understanding to open and their operations there at Gift City. So this was a brief about the infrastructure which this Gift City is having and is proposed to. If now we see towards the opportunity of our profession and we run through what happened since 2015 to date, then the regulations was there way back 2015, which was announced. Then there was a tax regime which got announced. Later on, the Singapore International Arbitration Center got opened way back 2017. IFSC Act in 2019 December was a game changer where the whole of the idea and the thoughts changed. As I said, the opportunity which was there in 2020 at the time of COVID have now grown to 4x in 2024. But it is just initial. It is not even like a percentage or a half percentage which of the total growth like would be coming in time to come. Establishment of the authority way back April 2020. We know the COVID was there in April 2020, and because of this, the authority was not able to work in such a easy fashion as it would have done. Then the bullion exchange, the banking regulations were there way back 2020. Then the listings of and trading of the REITs invest regulations was there. Capital market intermediaries regulations was there in 2021. Then the fund management regulations framework were there, and recently the direct listing in IFSCA got proposed in 2024. So friends, each and every of these opportunities is a professional opportunity. It may be that we are practicing in this area. It may be that we are not practicing in this area. But moving forward, if we think that this area solely, independently, one of the unit of this practice could be an opportunity for us. Maybe if we think that we need to practice maybe for the banking regulation or maybe the fund management entity or in the area of only capital markets or AIF, we can pick and choose even a single opportunity, or maybe in bookkeeping, in accounting. So each and every service which is there in itself is a professional opportunity which we as professionals can take up. So as we have discussed, the IFSCA Act was there way back 2019. Then there was these unified, as it is a unified regulator, all the developments of the unified regulator, like the financial product, the financial services, and the financial institutions come under a single ambit. And regulators like RBI, SEBI, insurance, pensions, now is being clubbed and put in together under IFSCA. So if we are doing any activity at the gift city, say for banking, then the regulator would not be RBI. Now the regulator would be IFSC. Or like we are doing any of the activities of insurance, then the insurance regulatory would not be the regulator. The regulator would be IFSC. If we are doing any fund management activity or creations of funds, AIF, then in that case, the regulator would not be SEBI, it would be again IFSC. So this is the transformation which have happened with this IFSC regulation. Now the regulator would be IFSC. Now, when we see our country growing at a phenomenal rate of more than 7.3%, and the World Bank have recognized this, when we are doing business and we are being recognized for the ease of doing business, and one of the third largest country we would be by 2027 in terms of the consumer markets, and the availability of the skills which are there available in our country, the real estate which is available in our country, the growth is phenomenal. The opportunities are phenomenal. To an extent, we have seen the stock markets, how the stock markets have grown. These opportunities in time to come through IFSCA would going to create and would be uplifted in many folds. So IFSCA would going to give an extra cushion to these opportunities which are available. Now, if we see what this gift city is giving to us, what gift city the IFSCA is being proposed to us. It is a single window clearance. That is, if we put an application, we need not to put and go for approvals at various desks. It would be done at a single desk. The tax benefit is not even from the government of India, but the tax benefit is from the local government, that is the Gujarat government also. In addition, it's, as we have discussed, is a smart city. The infrastructure is world class to be proposed to. There are infrastructure like the London Eye have been proposed. There's a big riverfront which have been proposed. So with all these infrastructure, with all the international colleges, schools, hospitals, it would be a world-class infrastructure, and it would be a place where people across the world would love to come and settle and would love to keep that as their base for their operations. This is just for the respect of the real estate and the infrastructure I am telling. The business which we would going to understand would be phenomenal, and that we would be understanding in our future slides. Moving forward, if we see this table, then world first three rankers of the international financial centers, like New York is number one, which is rated at 763. London is second, which is having a rating of 744. Singapore number three, having 742, and Gift City is having a ranking of 62 as of now, which is like rated at 672. So with this also, you can see how big is the opportunity, because as I told, the government of India is looking forward and seeing this as their dream project. And when the government of India is seeing it as their dream project, they would definitely would try to escalate this ranking to from 62 to a higher number, and would love to be there in single digits in time to come. And when this city would be growing, when this act of IFSC would be developing, we as professionals would be the biggest contributor of this development. Rather, I would going to say, without our contribution, the government would not be able to achieve a single digit ranking in time to come. So it's a win-win situation for both the government and we, the professionals, where we are having an opportunity to grow not even our practice, but to contribute ourselves as one of the bricks for nation building. So, what are the activities which are there? So, we can see as professionals in both the manners. One, as professional opportunity of doing these businesses. Having said that, if we as professional are working as an entrepreneur, then we can work for this banking finance service, insurance, capital market, fintech, global in-house center, aircraft leasing, ship leasing, ancillary service, direct listing, or we as professionals giving advice to our clients who are based in India but doing work abroad. That is, they are exporting. So we can help them out with these compliances for creation, for structuring of their companies, or our clients to bring their international business again back to Gift City from where they can operate, because the Gift City is in special economic zone and it is not being considered as the territory of the country. So any activity done there would be considered as an offshore activity. Apart from that, if we are giving services to any international clients, or we know international clients who are doing their international business from other jurisdictions like many of the US companies are doing businesses from Singapore, Dubai. So now they can look through we professionals to do their structuring and bring their businesses to Gift City IFSC. Slide number 14. Okay. Which slide we are on? Okay, I just again. Can you help me out? Like, is it a full screen? Yeah, slide number 15. And it's a full screen. Thank you. So the opportunities lie in both the ways, the inbound services and the outbound services. In the entrepreneurship, we professional doing entrepreneurship, or we professionals giving services of compliance and advice. So if we see the intermediaries which are there eligible for their working at Gift City, then broker dealers, clearing members, depository participants, investment bankers, portfolio managers, investment advisors, custodians, credit rating agencies, debenture trustees, account aggregators, banking units. These are the intermediaries which can operate their operations from GIFT City. So every intermediary is in itself is an opportunity wherein we can guide these clients for their compliance and consultancy. Why we are talking again and again the opportunities of GIFT City, where the opportunity, biggest opportunity lies, where the biggest attraction is. Definitely, we have understood the infrastructure which is there and which would be developing in time to come. But apart from this infrastructure, the opportunity which the government of India is giving in terms of the tax initiative is also the biggest one. Rather, I should say that is the second biggest one for driving this opportunity in GIFT IFSC. The prima facie is the infrastructure, the world-class infrastructure, the smart city, which the city would be having in time to come. And second is the tax holiday. So yes, 100% tax holidays for 10 consecutive years out of 15 years. So we can opt for any of the 10 years which is there in our thoughts. So if we like to start from say 4th year, so from 4th to 14th year, we can take tax holidays. We need to leave first 4 years and the last year. Or it could not be done like this, that we take 5 years, then we leave 5 years for tax holidays, and then again we take 5 years for tax holidays. The only decision we need to take here would be, it would be a consecutive 10 years for which we can enjoy this tax holidays, and that would be 100%. As we understand, there would be a MAT of 9% definitely, which would be adjusted at the time when we would be having any of the taxes in future. Apart from this, there would be no taxes in terms of the indirect taxes. So no taxes of goods and service tax, no taxes of stamp duty. There would be no taxes on the STT, CTT. So all the tradings, all the commodity tradings or the stock trading which are done at IFSC would not be taxed, and all that tax would be waived. In terms of the alternative investment fund, if we talk, then the AIF like category 1 and category 2 AIF would be created, and it would be having a pass-through status. The beauty of these AIF would be like any of the NRIs if would be investing in these AIF, then they would not be requiring any of the PAN card or income tax return which they need to be filed, and all the incomes would be considered as an offshore income, offshore investments through these investors. So with this, the ease of doing business would going to be there in terms of the AI. In addition, any of these transfers done by the unit holders would not be considered as the transfer. And if it is not being considered as transfer, whatever incomes is being generated through these transfers would be tax free. Then moving forward, if we understand about the exemptions in terms of the income as corresponding to their taxes, then for the interest income, there would be no tax. For the incomes of the bonds or like the rupee denominated bonds, there would be a very low tax, which is a 4% tax. And for like the transfer of securities, it would be considered as no transfer, and there would be no tax, as we have discussed. What are the specific securities which have been considered for this? So securities like bonds, GDRs, foreign currency denominated bonds, rupee denominated bonds, derivative units of mutual funds or the business trust, units of AIF, foreign currency denominated equity shares, these all would be considered as a specified securities in respect of. Now, as I have told, apart from Government of India, Government of Gujarat is also giving initiatives, incentives to the setups which have been made in the GIFT City. So up to an extent of 15% of the operating expenditure, which are being which are being proposed and given. There is a higher cap of like 20 crores and 40 crores of the gross operating expenditures. Apart from that, the capital expenditure subsidiaries to an extent of 25% is eligible, again coming up with a higher cap of 50 and 200 crores. So if we summarize what we have taken from the last 19 slides, and if we see that what is the roadmap, how we as professionals can ourselves set up and our operations there at GIFT IFSCA, or we can suggest our client inbound and outbound to set up their organization at GIFT IFSCA. Then we have to first and formally identify an office space in IFSCA. Then moving forward, we would be having an allotment letter from the office and would be doing formalities of incorporation of the LLP or the company or our branch there. Then an application to the SCZ need to be put in place, and an approval from the HCZ would be taken. And later on, once we get an approval from the SCZ authority, then we can start our operations. So if we talk today, there are more than 700, around 700 we can say, entities which are being operative at GIFT City, and there is a fee structure for every entity to be incorporated. So there is an application fee, there is a license fee, and there is an annual fee. For some of the entities, the annual fee are not there. They are having only the application and the license fee. And if we see in terms of the number of banking units, there are almost 23 banking units. Now it have increased. It is like in last 1 month, 1.5 months, there was a multiple growth which have happened in GIFT City. So now this 23, the official figure is not there. The official figure is 23, but it is around 27 as on date, wherein the number of banking units have increased to. There is an aircraft leasing, which are almost 90 aircraft leasing, shipping leasing, 7 finance companies, almost 3 finance companies which are in non-core activity, which are almost 5. And if we see, we can see the application fee in the column 2nd and the license fee in column 3 and the annual fee, which is related to these businesses which need to be paid to the IFSCA authority. So fintech entities, fund management entities, ancillary services, global in-house centers, insurance, reinsurance businesses, insurance intermediaries like brokers and others. Apart from that, broker dealers, clearing members, custodians, depository participant, investment bankers, investment advisors, debenture trustees, distributors. So every area have now opened and people are coming with their setups. In every entity, we as professionals are having opportunity for giving them advice, for giving them our consultancy towards setup and then later on their compliances, then trading members and so on. So now moving forward, we start with the specific areas where these opportunities lie. We first and formally take the banking and finance area. In banking and finance, any of the bank which any of these banks which look forward to set up and create their entities, who wants to accept deposits, do their borrowings, lendings, want to do retail lending, want to do lending to corporates, trusted services, equipment leasing, hiring purchase, referral services, factoring, underwriting, investment advisory services, trading and clearing member of any stock exchange. So any of the IFSC banking units are entitled to do all these activities. And apart from that, like bullion trading, custodian assets, they can go for a global administrative office, investment in securities, operating for the distribution of the products in the capital market, any of the payment services they can take. So these are the services a banking unit can do. Why these banking units would going to come and set up these operations at GIFT City? So again, first would be the low cost of infrastructure which they are finding. They would be finding low cost of human capital which they would be having, and over and above the tax benefits which they are having. So we professionals can guide these entities to come and set up their businesses in GIFT IFSC, and moving forward we can help them out in their compliances of all the activities. Banks like Bank of America, Barclays, HSBC, they all have opened their operations at GIFT City. Usually what happened for their offshore businesses, these banks, when they are placed in their home country, the taxes may be high. Because of this taxes, it may be like they are not finding it cost effective. For example, many of the banks have moved to Singapore way back, long time back. The reason for these banks moving to Singapore was the global finance which they were accumulating there at Singapore. It was easy to bring money in Singapore and to again lend the money out of Singapore. In addition, the tax regime, the government was having a very robust tax regime where they were helping these entities with a very low tax regime. So with this, many of the banks across the world have their setup at Singapore. Now in Singapore, there is a taxes of 17%. And if we see GIFT IFSCA as compared to Singapore taxes, the taxes is zero for another 10 years. So you can find and understand how the global banking system would be interested moving forward to come to our country. Just in January 2024, 12th of January 2024, our finance minister have taken an initiative of climate finance stock exchange at Gift City. And recently, 2 days before, a consultation paper, a committee have been formed for creating this climate finance stock exchange. So friends, think when whole of the world climate finance, when the contribution of every country is in millions of dollars, and when those contribution would be coming and would be getting cumulated at the Gift City, then the banking sector which is present needs to have their presence at Gift IFSC, because without that, so much of capital which would be flown in the Gift City and which would be again reallocated to worldwide, to the countries worldwide, then a very strong banking system would be required, and every bank would love to come and do their setup at Gift IFSC. So this, how big is this opportunity of banking and finance for we as professionals? In not even in getting them set up, but also doing compliances of these banks. Then moving forward, the finance company and the finance units, which are present, which can have their presence. So the activities have been distributed in two parts, that is the core activities and the non-core activities. So what are these core activities which are there? It is like the lending of the guarantees, which is their securitization, factoring, securitization of the investments, buying and selling of the derivatives, the treasuries centers which are being handled by these finance companies are some of the core activities which are being permitted. And in respect of the non-core activities, activities like merchant banking, authorized person, registered share trading agents, trusteeship services, services like advisory, portfolio management, international trade finance, leasing activities in the operating of the product, maybe of the shipping, or maybe in the aircraft leasing, or distribution of the finance products. These are the permitted non-core activities of any of these finance sectors. So for the non-core activities and for the core activities, one thing which we need to understand and remember is these finance companies and the finance unit are different from the banking units. So friends, banking units would be allowed to accept deposit from the residents and non-resident, but here the finance company and finance units would not be allowed to accept deposit from resident or non-resident. So this is an important clause which we need to remember in respect of the finance company and the finance units. They need to be registered as a banking unit. Till the time they are not registered as banking units, they would not be allowed for acceptance of deposit from either resident or non-resident. Then the other opportunity is there for the insurance. Today, friends, when anyone goes abroad, takes an insurance, or anybody coming from abroad taking insurance, there are multiple insurances which are happening, maybe for the freights, maybe for the international travel, for the international shipping. Lot many insurance are happening, not even from the country, but from abroad. So now, any of the insurance company can set up their insurance business at IFSCA, and with this setup, they can do the business worldwide. So what are these businesses which could be done worldwide by these insurance companies? Are Indian insurance who wants to do Indian reinsurance. So any of these companies which are doing insurance or reinsurance can set up their entity. Foreign insurance or foreign reinsurance, they can come and set up their entities. Society of Lords, branch office of foreign insurance and Lords India, public companies or wholly owned subsidiaries of insurance and reinsurance, insurance of cooperative societies, body corporate incorporated outside India and not a private company, managing general agents like the MGA. So all these are being permitted entities by an IFSCA through the regulations of Insurance Business Regulation 2021. So you can understand and see how big is the opportunity. Again, a company sitting at X foreign jurisdiction doing business worldwide can come and set up their organization, say in GIFT IFSC. And with that, whatever we have understood in terms of the capital of investments, in terms of human capital, in terms of the taxes, these all benefits would be availed by these entities. So what are the permitted activities by the IFSCA insurance office? That is the life business, life insurance business, the general insurance business, health insurance businesses, and the reinsurance businesses. All these activity would be the permitted ones from the IFSC insurance office, which they can do. For the registration of the intermediaries, the distributors like the corporate brokers or the corporate agents or the one who are doing direct brokering or doing reinsurance, any of these surveyors or the third party administrators, they all are being put in place for their setup at this IFSC. Now, in respect of the fund management entity, so friends, we have understood the banking opportunity, we have understood the finance opportunity, the insurance opportunity. Now we are headed towards the fund management entity. So in totality, there are almost 30 such opportunity. That is the opportunity of the financial services which are there. That includes the ancillary services which we can provide. We would be understanding in future slides. Services like accounting, bookkeeping, which the notification is there. The regulations would be coming in time to come. The consultation paper, the questions, answers have been completed on just 3 days before, on 16th of April. So soon the final paper would be coming for that. So for the fund management entity, entities which going to have authorized fund management entity, which are registered fund management entity, or which are doing retail business and which are doing non-retail business. Apart from that, the legal formation of these entities would be in form of like a company or an LLP or a branch. That would going to depend on the way these various entities are being registered with. And these entities would be having a minimum net worth of, as per their categories of like the authorized fund management entity or the non-retail or the retail one, would be having a different net worth criteria of $75,000, $5 lakh, or $10 lakh. So basically, it is like pooling of capital, not even in India, but across the world. This pooling of capital would be done, and once this pooling of capital is there, this pooling can be reallocated through and across the world. So here, where is the beauty of this fund management entity gets created in IFSCA? With this, what happens to the taxation? Again, we have gone through the taxation. We have seen the benefits which the investors would going to have and would going to cherish with. Because again, being an SCZ, it would not be having those tax implications, and it would be tax-free for the incomes which have been generated by these fund management entities. So the fund management entity which is one of the authorized fund management entities can run up in form of a venture capital scheme or a family investment fund scheme, or like which the fund management entity which are not retail can run with the venture capital scheme or the family investment fund, portfolio management services. In addition, they can handle family offices. They can work as an investment manager for the REITs and InvITs or any special situation fund. So basically, the major difference which the IFSCA had lied and tried to place was that the fund management entity which is involved in the non-retail portion, there is bit relaxation towards it, and the fund management entity which are in the retail segment, the net worth is also stringent, the products are also stringent, and the compliances also become stringent, because the management of fund which is involved in these fund management entity where retail investors are involved, the responsibilities increases many folds, and with this they can come up with any of the retail scheme or exchange traded fund apart from the authorized fund management entity activities which have been carried and the activities which have been carried by the fund management entities of non-retail category. So moving forward, if we understand the number of investors which these fund management entities should carry, we have seen and we have discussed that in terms of the scheme, for the venture capital, it could be in form of a company, LLP, trust. In respect of the non-retail one, which is the restricted one, company, LLP, trust again could be there. But for the retail scheme, company and trust would be always there. And for the special situation, all the three, the company, LLP, and the trust could be there. In terms of the schemes, the regulations which are there, the number of investors for the venture capital could be maximum 50. For in respect of non-retail, it could be maximum 1,000, and for the retail, it would be minimum 20. So these are the areas where these fund management entity would be operated with. In respect of the portfolio management services, there the client base could be non-retail, an NRI, a non-retail resident subject to FEMA, a resident individual subject to FEMA, and LRS. So friends, basically, if any of the portfolio management services which are doing portfolio management services in India, now moving forward, they can operate these portfolio management services from GIFT IFSC. With operations of these portfolio management services from GIFT IFSCA, they can cater the non-resident and the resident NRIs also. And again, if they are catering the non-resident and the resident, non-resident and the NRIs, then in that case, the taxation benefit would be there for the non-resident and the NRIs. And in case, as they were doing their business previously also from India, they can do that similar business at GIFT IFSCA. The only restrictions they would be having in doing their businesses from GIFT IFSCA would be the FEMA restrictions, and that is like $2.5 lakhs per annum investment. Apart from that, they would be giving all the other benefits to the to the client base who are putting their money for the portfolio management services. So the investments which are being permitted to these portfolio management services would be the securities and financial products in IFSCA, in India, and in foreign also. From there, at GIFT IFSCA, they can do the business worldwide. So, for example, a portfolio manager wants to create an exposure in, say, US or Singapore or India, any part of the world, then they would be able to do the same to an extent. There are exchanges which had opened in IFSC, the Bombay Stock Exchange and the National Stock Exchange. They have started their operations at IFSCA, so they can do their transactions at those exchanges also. So after creating and setting up their office at GIFT IFSCA, the horizon of their investments increase manifolds and across the world. And so do our professional services also. Now, once we are advising our client who are doing their businesses worldwide, then the services which we can offer to them for not even for the taxation, for the structuring, for their compliances, but also for their accounting, for their preparation of their submissions to the IFSCA, or if they are doing business to other part of the world, if any compliances need to be made for that, then also we can give a support to these clients of ours worldwide. So moving forward, if we understand and see the investment trust, that is the REITs and the InvITs. Recently, it's like 30 days before, that is 20th of March 2024, SEBI chairman was there in a session where she had told that the Indian equity market is one time GDP, and in time to come, that is 15 years down to line, 10 years, 15 years down the line, she is expecting that the REITs, InvITs, and the bond market in together, would be one-time GDP of our country. So you can understand how big this REITs and InvITs market would going to become in time to come, how big the opportunity would going to become when the GIFT and InvITs would be operative from GIFT IFSCA. Worldwide money would be pooled at GIFT for the REITs and InvITs, and again would be distributed maybe to the country India or any other part of the world. So again, with such a big amount flowing in and distributed in or around the world, we professionals sitting in the country would going to have a big opportunity in this regime. So if we understand, this is a clear setup of the minimum net worth, the trust would going to have the asset size which the trust should have, what is the offer size which the trust needs to make at the initial offer of its. There would be like the trustees, sponsor, investment managers, and the roles of sponsors, like the minimum holding of the sponsors needs to be 5%. They need to be having a minimum net worth of USD 15 million. They should have an experience of 5%. These all are the compliances part which we need to see, and we need to see the eligibility of these sponsor, investment managers, and the trustee. In terms of the legal format, like it could be in form of a company, LLP trust, or a body corporate, and the setup could be done at the IFSCA with the registration certificate which the IFSCA would be providing to them. Apart from that many of the family offices are now being shifted to GIFT IFSCA. Many of the family office, if I name, office of Azim Premji have recently shifted to GIFT IFSCA. So these family offices have an opportunity, not even like do investments in India. Backforth, they can do investment worldwide. So when these investments was done from India, the taxation of Indian regime was to be levied on them. But now, if these family office gets operated from GIFT IFSCA, then the tax benefit which they can avail is available accordingly. So they can do investments in Indian market, in foreign market, in derivatives, in unlisted securities, in mutual funds, in AIFs, and any commodity derivative. All the avenues gets open. Assets, like if they want to purchase in real estate, bullion, again that gets open. So again, whatever investments or income have been earned by these family offices, they would be having that tax benefit. So many of the family offices are now planning to shift to GIFT IFSC. Apart from that, the legal formation could be in form of a company or an LLP, and the minimum corpus which is required is USD 10 million, which they need to have there, and in 3 years they need to bring this level to 10 million. So they can incorporate their entity. The corpus may be lesser at the initial level, but in the coming 3 years, when they get their registration certificate, they need to achieve this 10 million. So friends, alternative investment fund is again a very big opportunity. Way back 2014, this regime came in India, and today, in just 10 years, there are more than 1,300 AIFs which are registered in India. These AIFs, which are registered in India, is having an opportunity of pooling money from worldwide, and then the investments could be done in India. But now, with opening of this AIF at Gift City, the opportunity again increases manifold in a form that the AIF now can pool money in Gift City. Maybe if they want, they can invest this money in India. And if the AIF finds that the opportunity worldwide, other part of the world lies with them, then they can invest those money in those part of the world. Again, as we have understood in our previous slides, in terms of taxation, these investors who are investing in this AIF, these AIFs would be considered as an offshore AIF, and again, no transfers, no requirement of PAN, or no requirement of filing of the returns in India would be required by them. If, like, for understanding, the AIFs are being divided in 3 categories: category 1, 2, 3. Majorly, the AIF 1 category are for the social venture fund, the infrastructure fund. For the type of 2, it's like the private equity fund, debt fund. For category 3, it is more towards the hedging, more towards the derivative or the riskier part, which AIF 3 category tantamounts towards. And majorly the parties are like the sponsors, managers, custodians, the entity itself. So again, with every opportunity, we have a professional opportunity of maybe serving a sponsor. We have a professional opportunity of serving the AIFs, in creation of AIF, in compliance of an AIF, in filing of the returns of the AIF with IFSC, with accounting of these AIF. So ample of opportunities which every category which we are understanding today. So the investors again could be a non-resident or an NRI or a resident also, but a resident needs to take care of the FEMA regulation which need to be followed, because again, this AIF which is registered at Gift City would be considered as a entity which is registered, which is placed at a foreign jurisdiction. So accordingly, the FEMA guidelines needs to be taken care of. Now, big opportunity for the fintechs. So again, if I'm talking fintechs is not for the fintechs of our country, not for the fintechs for our country which are operating outside. Fintech in totality is for the fintechs which are worldwide, including our country. So any of the fintechs in our country which are doing foreign operations, now those fintechs can come back to the country at GIFT IFSCA for their setup and can do operations worldwide from GIFT City. Apart from that, if any of the fintech may be having their operations in any part of the world and giving services to other part of the world, can bring down their offices in our GIFT IFSCA. What would going to happen? Again, the same 3 opportunities which they would be having: the taxes, human capital, and low cost of real estate. If we do any of the operations maybe in US, Singapore, Dubai, UK, Australia, Japan, China, the cost which is involved for these fintechs would be far more higher. Apart from that, the human capital which is available to them in our country would be far more cost effective from what human capital they are sourcing there abroad. So these are the fintechs which are there. So entities which are registered with the Department of Promotion of Industry and International Trade, that is DPIIT, as startup related to fintech or legal form, company, LLP, branch of a company or LLP in IFSC, entities working directly or indirectly in the ecosystem regulated by domestic financial sector regulator. So these are the entities which would be eligible. In regards to the entities, fintech entities which are abroad, then entities which are not in the jurisdiction of FATF, that is the entity from Financial Exchange Task Force complied jurisdiction. If they are from that jurisdiction, then in that case, all those fintechs would be eligible for coming and setting up their entities in GIFT IFSC. So combined together, the Indian entities, there is an eligibility which is to be required and which needs to be fulfilled and taken care of. And for the foreign entities, the eligibility has been defined for the entities which are not coming from the jurisdiction which is basically which is the jurisdiction which is restricted. So any of the entity which is coming from a non-restricted jurisdiction, then those all fintech companies can come and do a setup of their in the GIFT IFSC. So the use of the technology in its core product or services or the business model, distribution model or methodology to solve the problem. So any of these activities done by the fintech would be eligible in coming up and setting up their working at GIFT City. And the applicant should have a solution of the product and they should have at least 3 years financials. So it is not like absolutely new company which is coming and getting the setup done is allowed. It should be having at least 3 years of operation. There is a different platform for the fintechs who are having less than 3 years eligible, 3 years working. There is a different platform, but on this platform, they need to have a track record. They need to have been working since last 3 years. So the entities which are there for the testing, that is in the sandbox, would be regulated. These are the new ones which would be there in that sandbox. Once they go through the sandbox, then they would be eligible for the operations and for getting the test. Once the testing is done, they can start with their operations. So what are the activities which are there for the banking? They could be the one who are remitting, doing payments for the digital lending, for like the buying now, paying later, open banking, crowd lending. These could be for the banking sector. Fintechs in the capital market could be crowdfunding, uh, personal finance, wealth tech, alternate trading platform. For the insurance, maybe for the digital innovations, for the open insurance, for the cyber insurance. Types of banking, capital market, insurance sector, these fintechs are being allowed. Apart from that, fintechs like in agri-tech, maybe defense tech, space tech, supervisory tech, technologies, in big data, maybe in biometric, cyber securities. These could be the opportunities which these fintechs can have and come. Now, moving forward, in terms of the global in-house center, the global in-house centers are the one where a business is having their operations worldwide, where these operations are being operated at different part of the world. Now, what is being proposed is all these global house which are working across the world can be brought down, could be pooled in with their entities specifically to the gift city, and the services from the gift city could be distributed, could be given worldwide. With this, what would going to happen? Again, the cost which is coming for these operations would going to come very drastically. There would be a very low cost on which these global finance hubs can be operative. Systems like financial services groups, like the banking, the NBFCs, the financial intermediaries, investment bankers, brokering firm, actuaries, reinsurance businesses, stock exchanges, depositories, clearing houses, custodians, fund managers, insurance companies, they can now pool up, bring all their operations in gift city. From there only they can manage all of the businesses worldwide. Again, low cost of human capital, low cost of infrastructure, and at the end of the day, the taxation benefit will be one which is going to attract towards this fintech. Now, aircraft leasing, again a big opportunity where we see our country which is having grown multifolds in these last years, where the industry, aircraft industry is growing day by day. There are lot many aircrafts. Recently, Air India have also done their shipping aircraft leasing at GIFT IFSCA. They have recently registered some of their aircraft at GIFT City for the leasing. So again, the tax benefits which they can avail, the leasing could be done in an entity, maybe of a company, LLP, or a trust. What need to be taken care and understand that somebody who is not coming from a restricted jurisdiction, that is what is the most important, which needs to be taken care. And the leasing could be an operating lease, a lease of operating for the training, the simulators, it could be the lease for the lease backs and the purchase for the asset management support services. It could be done, and it could be in a form of an wholly owned subsidiary company. It could be for the finance leasing, which could be done. It could be finance leasing of leaseback proposition. So all types of proposition of leasing would be available for this. Similarly, in the same parameters, the shipping leasing has also been permitted over here as one of the activity. Again, Reliance Industry have recently announced to shift their shipping leasing business at Gift City. So again, the operating and the finance lease both are there at the Gift City IFSC. Now coming to the most important, which is directly linked to our services to each and every professionals of ours. So to summarize it and to give a background, if any of our services are being given worldwide, then now we as professionals can open our branches there at Gift IFSC, and the services which are given to these foreign entities from Gift IFSCA, all the taxes which would be there in respect to that branch of us would be tax free. So all the businesses, all the professional fees which we are getting in dollar terms, in foreign currency, now with the method of opening our branch at Gift City in form of an ancillary services, that could be taken care. And again, that branch would be considered as an offshore unit of our entity. So whatever benefit an offshore unit would be getting in terms of the taxation, direct taxes, indirect taxes, all would be taken by us, all the benefit. So if any of the entities like legal services, compliances, the secretarial services, auditing, accounting, bookkeeping, taxation services, professional management consultancy services, administrative, asset management, support service, trustee services, all would be we would be getting a benefit. Recently, as Rohit Ruhatia ji, chairman of our committee, have told, like the institute of our Institute of Chartered Accountant, our institute, have given their recommendation on the consultation paper which was there for the auditing, accounting, and bookkeeping taxation services, where many benefits to we as chartered accountants of the country would be having. It was like the committee's efforts with which the efforts was taken, and it was suggested to the IFSCA that only the professionals who are there in the country, that is India, would be allowed to do some specific activities, to do some specific services which need to be given to the entities which are there at IFSCA. So that's a very welcome and a proactive move which have been taken by our institute, which would in time to come would going to give lot of benefits for increasing our professional services and would help not to dilute our professional services at Gift IFSCA. We as chartered accountants would only be giving the services at the entities which are set up and which would be set up in time to come at Gift IFSC. So there where the big opportunity for us lies, and we assume like in another 1.5 months, the consultation paper after the announcement by the government of India on 18th or 19th of January, this consultation paper was there, and once the consultation papers becomes a regulation, there would be a huge and ample of opportunity which we as professionals would be getting in setting up and doing up the accounting and bookkeeping services for worldwide. So there would be set regulations which would be there once this consultation paper turns up into a regulation. So apart from that, the legal formation could be in form of a company, LLP, or a registered partnership firm, and service recipients could be, as told, the entities which are there in IFSCA. As I told, there are odd 700 entities already which is working in IFSCA. So those could be the one to whom we can provide services. Entities which are at foreign jurisdiction can also be one of the service providers to whom we can provide services and give our compliances. Friends, this direct listings at IFSCA would be one of the biggest game changer, not even for our country, but for the world. Now, with this direct listings, anyone who looks forward to buy any stake through NSE, BSE, or any company who looks forward to raise capital abroad, now these all activities could be done over in IFSCA only. That is, they need not to go to, say, US markets to get themselves listed and to raise funds, or they need not to go to the London Stock Exchange for raising. So now these ADRs and GDRs would be old time fashion once the direct listings get started in our IFSCA. So moving forward, what would going to happen? So in January 2024, the papers were out, the regulations were out, and it is been assumed like another 3 months to 4 months down the line, the first direct listing would going to happen at the GIFT IFSCA. Who are the holders who wants to do a buying and selling of any of the Indian company can do these transaction at GIFT IFSCA stock exchanges. That is, as of now, the NSE and BSE are being operative there. Shares which are listed or to be listed on international exchange, that could be like operative. So this would be the opportunity for not even for the country, but for the world, where now they can also come and get themselves listed in the similar manner as we used to go to the US markets or the UK markets for getting ourselves, our entities being listed there and to raise money from those markets. In the similar manner, now worldwide, an issue could be there, and the listings and the fundraising could be done through these stock exchanges, through these jurisdictions. So, who would be the holders? Holders would going to include the beneficiary owners who hold the equity share of a company which is listed on an international exchange. It is not a person who is resident in India. That is what we need to make and understand ourselves. If any of the person who is resident of India, then they have a platform, existing platform of NSE, BSE, where like they would be operating and doing their businesses. and it should be a central government approved. If any requirements, then those citizen or the beneficiary owners needs to be there. So, which are the stock exchanges which are being specified? It is the Indian International Exchange, that is BSE, the Bombay Stock Exchange, and NSE International Exchange, that is a subsidiary of the National Stock Exchange. And in terms of the eligibility to the issuer of the offer of equity shares on a specified international exchange, it could be the public Indian company or the existing holders. That is, if the new equity which need to be which is looking forward to raise money, that could be the one who can bring themselves to this platform, or like if any of the existing holders want to shift, then in that case it would be done. Now, what would be the beauty of it? The beauty of it would be, now the investments would be done in dollar terms only, or whichever permitted currency it is in. And once the exit is being done, these exit would be done over there. In addition, these would not be, as we have understood previously, these would not be considered as transferred. So as they would not be considered as transfer, the point of capital gain, point of filing of returns, point of taking PAN cards, this would not be required. So with this ease of doing business, the flow of capital would be coming easily. The number of investors which would be coming would going to increase multifolds. So the public Indian company which may issue equity share or which offers equity shares to the existing shareholders can use this platform, but it is subject to some conditions. If we see these conditions, then the issue and the offer shall be permitted and shall be listed on a specified international exchange. So if an issue is there, then it is compulsory that that issue should be listed on that international exchange. Another is the issue and the offer is prohibited in respect of any of the lotteries, any of the chit funds, nidhi funds, any of the TDR which is trading, any of the negative net worth company. So these would not be allowed. In addition, all the transactions would be there in a demat form only, and all the rights of the existing shareholders would going to remain. So these are the some of the areas which I assume are having a great professional opportunity for we as professionals. Apart from our individual practices which we can give to our clients in respect of their specific needs, for their specific compliances, for their specific registration or incorporations, these all have an individual and independent area of practice which we as professionals can, moving forward, can adopt. Friends, as we know, when we are talking that by 2047 we would be a developed nation, it would not be possible for the country to grow without a strong flow of capital. And the biggest flow of capital which we assume would going to come from this gift IFSC. And as told previously, when this flow of fund, when these entities would be there, we as professionals could only be the source which could help them in growing their businesses, in supporting their businesses. So with this, I thank the committee, chairman, vice chairman, secretary of the committee for giving me this opportunity And now I look forward for any of the questions, if any, would like to love to answer them to the best of my knowledge. Thank you. Thank you, everyone. Alokji, are we having any questions?
नहीं एक मिनट sir. Sir, just give me a minute. We are just checking up the questions. We'll get back on that.
Yeah, please. Thank you. Thank you.
Yeah. Yes, sir. We are having the questions, and I would like to take up one by one with you. The first question is, sir, what kind of services are offering by GIFT International Financial Service Center? I think this is very much covered by you during your
Yeah.
entire thing.
Yeah.
Coming to the next one is currently Indian companies raising foreign capital by opting option of GTR, ADR. Is IFSC followed to raise capital through any simplified mechanism, say direct listing of equity or debt?
So wonderful, a wonderful question. Uh, Basically, as told, there would be a big game changer in time to come, and in like my just last slide where I had covered this in January 24, the direct listing this regulations was there in place, and we are yet to see the first listing maybe 3 or 4 months down the line. So as I told, like when we used to go to maybe the US market, Singapore market, or the UK market for raising up these capitals, now IFSC International would be equally be operative like an international jurisdiction market for us. So any of these GDRs or ADRs which we used to raise from foreign markets, now we can do the same at our GIFT IFSC international exchanges, and
Okay, sir.
through an issue at GIFT IFSC.
Fine, sir. Thank you so much for the clarification. And coming to the next question, sir, would you share any view if global fund manager establish his or her offices in GIFT City, whether he or she can do that?
Yes, definitely. As told, like it's an inbound and outbound services. So any of the global fund managers, if they are like, for example, operative in US, then at US the rate of taxation is 42%. So whatever has been earned by the global fund at US, pooling of the money and creating an income towards that would going to attract an tax of 42%. Now, moving forward, if those global funds shift their operations in India, shift their operations at GIFT IFSCA, then the jurisdiction would going to remain a foreign jurisdiction. In addition, whatever profits they are making for those 10 consecutive years which they choose would be tax free. Apart from that, there would be no other duties like stamp duty, GST, STT. Maybe they are trading at the Indian exchanges also, these fund houses, then those would not going to attract the STT and CTT also.
Okay, fine, sir. Sir, coming to the next question, whether a manufacturing company can set up a WOS as Treasury Finance Company in IFSC?
So, if a manufacturing company look forward to set up their treasury, the treasury is in financial service. If they are purely looking forward for a treasury operations, so the treasury operations could be operative. It has nothing to do with the manufacturing hub. Treasury is absolutely a financial product, so they need to identify and understand the identity in which they would be doing these operations. But yes, certainly they can.
Okay. Sir, coming to the next question, which is from the same member, so I'm just clubbing both of them. As a CA, do we need to set up our office there to provide these services? And how much time does it take up to set up an office? Do we have to relocate there, or we can work from our office situated at our current area?
So basically, we need to open a branch office there. As like discussed in our presentation, we need to first and formally identify our office there. Then we need to put an application to the IFSC and the SEZ for seeking permissions. When those permissions are there, we can start our operations from there. And definitely, certainly, we need to be present there as our branch office.
Oh. Sir, in connection to the same, there is another question. Are CAs allowed to open a branch office in GIFT City by way of branch of a registered firm in India, or it has to be in the status of LLP or a company?
No, it would be in form of a branch of the registered firm in India. And we are allowed to open it.
Coming to our next question, sir, under bullion framework, who is allowed to import bullion from foreign countries?
So the one who are registered at GIFT IFSCA, I assume there are odd 130 or 120 odd bullion traders who are registered at IFSCA. Registration formalities is like the same which we have seen. They need to identify the office, they need to put an application to the authority and the SEZ, and they need to get the approval. Once this is done, they are an offshore entity, and it would be treated as any of the offshore entity is importing the bullion in IFSCA. So a registered entity is allowed basically.
Sir, thank you so much. Now coming to the next question is, this is about the foreign investors who want to invest via IFSC. Do they need to open a bank account in IFSC, or how can they transfer fund to and fro from IFSC?
So anybody operating from there, they for their convenience, you can say, they need to have their bank account there. And as I told, there are odd 27 banks which are currently operative there, and out of them, 8 or 9 are the public sector banks. 6 or 7 are the foreign banks. So definitely they need to open their account there because they would be having their full setup there only. They would be having their office also. They would be having their manpower also there. So bank account would also be required.
So, sir, all the requirements related to bank account, will it be, this will be governed by the particular the mandate which will be operative in IFSC, or this would be same as what they see in India?
So it would be operative as per IFSC because it's an IFSC unit. It would be governed by IFSCA. As like briefed before, bank at IFSCA would be governed by IFSCA regulations. It would not be governed by RBI regulations. IFSCA, it in itself is a unified regulator.
Fine, sir. Thanks for clarification. Coming to next question is financial center felicitating foreign or Indian businessmen, visitors or workforce in relation to staying, living, social infrastructure. Is there any kind of a felicitation which is available at the
Can you please repeat the question? I didn't capture it. Sorry.
Yeah, this is financial center facilitating foreign or Indian businessmen, visitors, workforce in relation to staying, living, or any social infrastructure?
So yes, basically it's an upcoming city. If we see, there is an 833 odd acres which have been acquired by the GIFT City, and in addition, like recently in December, they have acquired in totality 3,300 acres. So they are in a way of developing the social infrastructure. If we talk about the social infrastructure, Lilavati Hospital have started their construction. They have come to like third or fourth floor of their construction. There are tenders which have been floated for the riverside development. There have been tenders which are yet to come for the London Eye, and it is proposed that world's biggest London Eye would be developed there. And if we talk about in terms of the infrastructure which is currently there, maybe the roads or the building, it does not look like less than something like Dubai or Singapore. Maybe the roads or the infrastructure in terms of the buildings and the grade A buildings, which are offices buildings, which are there, that are like fabulous, basically. So it would definitely, the whole of the social infrastructure would going to take at least 3-4 more years down the line. But yes, it is in terms of progress.
Thank you so much, sir, for all the clarifications and answering all the queries which have been posted by our participants. And this is really an enriching session. There's a whole lot of new insights which you have given about this gift city and what all gifts it is having to be offered. And definitely there is a lot of scopes for chartered accountancy profession, be it they see in providing services to their clients or set up their own practice in this new regulated, I can say the opportunity, a golden opportunity, which is just lying ahead in front of the accounting profession. So we would like to thank you for giving us the time and for sharing us all these insights. And we are also thankful to all the participants for joining us in today's session, that too in large number. Your number actually keeps us motivating and encouraging. So thank you so much once again. If there is any particular feedback or question you want to give to us, you can write to us at cmp@ici.in, and we will definitely get back to your concern query after getting the same addressed to our eminent speaker of a day. And also, we would look forward to your suggestions as regarding what kind of topics we would like to bring in. You want us to bring in under this series of Grow Your Practice. So thank you once again. We wish you all the best for the coming days. And from Committee for Members in Practice, we would now like to sign off as it is already time to wind up. Thank you once again, Amit Kedia ji, for your valuable time.
Thank you very much, Committee for Members in Practice, headed by Secretary Alok ji and Chairman Rohit Ruhatia ji. Thank you again for giving me this opportunity, and thank you all the participants for a patience listening. Thank you very much.